Good evening, everyone, and we'll begin with our today's session about the tax planning and with respect to the investor awareness program presented by the Kedia Capital Services. So I'll be just sharing with my screen. If any doubt comes around, please write it in the chat box and we'll answer it after the sessions or in between the session as well as comfortability. So I'll be just sharing with my screen now onwards. So we'll begin with the today's session part. Whenever we talk about the taxes, the first and there are three basic things that always comes to our mind. That is income tax. When it comes about, it's about salary, how much salary we are earning it, and how much taxes we need to pay, and how we can save and avoid those taxes. So these are the basic three questions that always comes to our mind when we talk about income tax. As you know that the financial year is about to end and it's being like just 3 or 4 days is left out, and it's the most important question that we need to understand with, like how much salary we are earning so that we can, are we able to pay the tax, or like do we need to save it, or do we are actually avoiding the taxes as well. So we today I'll be in this session we'll be telling you about what actually we are doing and what actually the tax planning is. So whenever I talk, even one of the Albert Einstein, one of the famous person said that hardest thing in the world to understand is the income tax. So whenever we talk about salary, whenever we talk about the payment of income tax, the first thing all of a sudden, like I don't know, understand like why do we need to pay the taxes? Why, how much income tax do I have to pay? How can I understand the difficulties of the income tax as well? So even the Albert Einstein also said the same thing. It is the hardest thing in the world to understand it. Even so, what wrong with just not paying the tax? Even some people think about like why not pay the tax? Let's avoid it. So if you are avoiding that tax, that it means that you are not contributing to the economic development of the country. With economic development, the country is related to the road, transportation, all these facilities are important. So if we pay the taxes, then our then our country's economy will be developed over the time period. So even Alex Himmelfeld, who is the owner of the author of that book, tax is not just a four-letter word. Rather, it's the price we pay for the country we want. So if you pay the tax, then it means that you are actually contributing to the development of the country. So how you can contribute to the country's development? So there are certain benefits which actually governments provide once we pay out the taxes. That is, we lots of people who are not able to afford the food, they get the food facilities in terms of by way of subsidies. We have the national defense security facilities, we'll get it once we provide the taxes. Government actually spend on national defenses. They provide public educations to the girls and children who are illiterate. So all these facilities government generally provide, even the police protections to our public, to us as well. Whenever something theft or anything happens out, even we provide us national park, road, highways, and many other direct and indirect benefits. So it is important for us to pay the taxes on time, and of course, with paying taxes, we are getting the benefits as well. So what some are indirect benefit as well? So it's an important part. So with just saving taxes, it helps us in getting a benefit of self betterment. So even people don't understand the importance of health insurance when it comes to the life insurance. They generally don't go for the insurance part, but when it comes to taxes, they actually go for these covers as well. So with these cover, we are actually taking care of ourselves as well. Because if I consider, if I met a lot of the clients as well, they always say that why do I need an insurance? I'm safe side, so I don't need to cover off these expenses. But when it comes to state taxes, they always look at their policies and check, okay, do we have the health insurance cover? Do we have a life insurance cover? Or do we have taken the housing loan or not? So all these benefits are for self-betterment as well. So that is an indirect benefit. But along with that, we are also creating our asset as also and saving our financial futures as well. And with saving taxes, we actually learn about the financial literacy. We actually get to understand like what are the different kind of investments are available, what kind of the benefits when it comes to the housing loan, when it comes to the tuition fees. So all these things are we are actually paying out. So our expenses are actually we can claim it by saving the taxes as well. So saving taxes is again another benefit. Beside this thing, other benefit is we actually help in generating employment and business in our economic as well in a society as well. So while saving the tax, it means we are paying for the health insurance cover. So whatever we are paying for the health insurance cover, some commission goes to the insurance agent as well. We are buying a house, so we are giving a salary to the housing loan company persons. We are giving an income to the businesses of property. So all these things comes out. So we are not just saving the taxes, we are actually contributing to the economy in an indirect way as well. Beside this thing, but we just not to contribute but don't avoid these taxes. So by avoiding taxes we are not actually supporting the economic development of our country. As we can see that in the last 5 years our country has been taken a step rise in terms of development. So if we just avoid the taxes, we are not actually supporting the economic development of our country, and we are looking for an illegal alternate option just to avoid the taxes. So that's not a right thing. It's better to pay the taxes and live a tension-free and a very good life. Because if you just avoid the taxes, then you might become around the scanner of the IT department as well. So it's better not just to go for avoiding the tax. It's better to save the taxes by contributing to the economy if you want to go for saving the taxes. And if you don't want to save the taxes and want to spend it, then spend it but pay the taxes as well. Because with taxes you're getting a development in our society, in our nearby environment as well. So the important part that comes to everything about like why do we tax say while saving the taxes, what things we need to consider. So there are certain major things that we need to understand that before saving the taxes we actually need to plan out our taxes in advance. Because if we doesn't plan out all our taxes in advance, then we are not able to save it wisely as well. So if you have already planned out your taxes for the next 3 to 5 years already in advance, then you must be saving it. You won't be worrying about this end moment kind of issues, because today it's an end moment kind of issue. Next time again the same issue arises. So it's better to plan all these taxes for the next 3 to 5 years, because if any major changes come around in between the years, after 3 months, after 6 months, or after a year as well, but before the financial ending comes out, then it will directly impact your contribution to the taxation part and also your savings pattern as well. So it's better to plan your taxes wisely and consult with your CA, because if any income rise comes out, if any decline in your income comes out, so your CA or you can consult to your financial planner for tax planning purposes. So they can actually help out in planning for your taxes for the next coming 3 to 5 years as well, or more than that as well. An important thing, though this session is for a last minute movement, it can tells you about like what the rush, what things you can offer. But always remember, don't rush for the last week race, because what happens is you actually miss out the race. So there are a lot of investment available just a week before. Even you can offer an equity if you have already invested in an equity market, and there are some losses in your shares as well. So you can book that losses in this period in the current financial year, and in the first of April you can again buy. So that's another kind of benefit which you have missed out. And as you know, that is the fourth of Saturday in India. So today is the bank is already being closed, and on Monday it's a holy, so it's again and off. So it's 30 and 31st. So if you are making any major investment in between that time period, it will be kind of a little bit hurry part and kind of a confusing as well. So it's better not to go for every time or last week. It's better to plan it wisely in advance, because tax planning plays a vital role in not just saving taxes. It actually helps us out in saving for our self betterment and for our spending as well. Now the important part comes out, the purpose of this webinar as well, like how you can save taxes. So when I talk about the taxes part, so how you can save taxes. So we need to understand that there are certain options as per the taxation part. There are certain benefits we can claim out while saving the taxes, not avoiding, but we can actually save taxes by claiming the deduction and exemption. So as per the old tax regime, so as there are two types of tax regime which has been announced by the Finance Minister Nirmala Sitharaman ma'am. So as per the old tax regime, we can claim all these deductions, whether it's a standard deduction, whether it's a section 80. So if I'm making any payment to LIC, to Provident Fund, to ELSS, that is Equity Linked Savings Scheme, or NPS, National Savings Certificate, or even housing loan, or to education loan interest payment. So all these things we can actually claim out. Even if you are paying some tuition fee to our children as well, so we can actually claim a deduction of up to 1.50 lakh rupees for every financial year. Beside this thing, if we are making additional contribution to the national pension scheme, that means additional 50,000 rupees we are claiming. So that's total of 2 lakh rupees we can claim in deduction along with the standard deduction. These are benefit we can get it. Along with this, if you are paying any interest, so we can claim housing loan interest as well in this part. If you are claiming for an health insurance, so we can opt another kind of a deductions up to 35,000 rupees through health insurance. So if you are planning, if you are paying an education loan, if you have opted for education loan, then we can claim education loan interest. So there is another benefit we can claim for education loan. And if you are getting any bonuses from our insurance policies as well, then it is a tax-free insurance bonuses. So that comes around under the section of 1010G as well. And if there is some agricultural income, then up to 5,000 rupees that agricultural income is exempted from the income tax. And if we are getting some royalty income, so if you have written some book and you are getting a royalty income, if you are an author as well, then under Section 80 RRB, you can claim and deduction or exemption up to 3 lakh rupees. So that's another kind of a benefit. So if you are just working and you have written a book and you have published it and you're getting some royalty income from it, then again, that's a tax-free income. Beside this thing, you can make donations to political parties, to charity organizations, and many other deduction benefits. You can get it. So there are more than 70 and hundreds of deduction benefits in the old tax regime that you can claim it. But when we talk about the new tax regimes, then we have to avoid all these exemptions because there are around 70 or more than 100 income tax deduction and exemption which all these has been removed in the new tax design. So that's a major thing we need to understand between the old and the new tax design. For opting for a new tax design, we have to outgo all these benefit, even the HRA standard deductions, etc, ATTTA, ATTTB if you are senior citizen, education loan interest, all these tax benefits which are claiming in the old tax regime, we can have actually have to go away from it, and can only just pay the taxes. We are not making any investment, so you can just pay taxes and go around. Though you can also make investment, but it does not bounds you to make investment only in these instruments. You can make investments in other instrument as well, but in those instruments you are not getting any kind of a tax benefits or deductions as well. So what things or what are the major benefit? The question comes around which option to choose, whether a old tax regime or whether a new tax regime. So there's a very good difference I can show you. So consider if someone is earning an annual income of 8 lakh rupees with an old tax regime, they can see with its standard deviation of 50,000 rupees if they are claiming of 1.5 lakh rupees of their limit they can exhaust it in the old tax regime, along with they have made a contribution of 50,000 in NPS as well, and they are getting an HRA, leave travel, LT allowances. Then total deductions that they have claimed it out in the old tax regime, that is 3 lakh 5,000. But in new tax regime, they are not paying anything. They are not getting any kind of a deductions. They just there is just an 8 lakh rupees. So when it comes to the calculation with as per the new tax regime and the old tax regime, as we can clearly see with that old tax regime, we are not paying any taxes because even the 5 lakh rupees of income, up to 5 lakh rupees of income, we get the benefit of under section 87A, that is a rebate. So we does not have to pay that 12,500 rupees over the income of that part. So in the old tax regime, we are not paying any income tax. But in the new tax regime, we are actually paying an income tax of 46,800 rupees. So that's the major difference when it comes to the taxation part. As we can see, the major difference in the taxation is in old tax regime that we always pay 20%, but in the new tax regime, we are paying 10 and 15%. So that's the major issue that as your income rises in the new tax regime, you will paying an huge amount of money. But in the old tax regime, you claim deduction benefits and you pay a little bit less taxes. But it depends how much deduction you have. So if you have a less deductions, if you have not making all these investments, you do not want to offer ELSs, you have not opted for PF or any kind of tax exempted or tax beneficial financial instruments, then new tax design is for you a best option because a devil's lies in the depth. But in new tax design, it you actually saves out if you're not making any investments, which is a tax efficient purposes, or you're making investment which in which you are ready to pay the taxes as well. Now here are some key union budget highlight which actually government has made. So in this budget in the 2021 government has not made any major changes, but with the senior citizens above the age of 75 years of age, with they having only pension income or interest in, they all have been exempted from filing an income tax. Even in the time of proceeding. So earlier with the case disputes of tax disputes, it takes up to 3 or 7 years, but this time it has been reduced up to 3 years. Advance tax liability on dividend income only after declaration and payment of dividend. So whatever tax liability you will having it over the dividend. Earlier, whatever there is a very basic issues and always an issue comes up whenever we are filing or whenever we have make any investments in stock as well, we are getting a dividend and we are not able to calculate it, or it's very difficult to give all the details of how much dividend you have earned. Everything we have to do it on a manually basis. From this years onward, that even from the next year as well, all kind of your dividend income, everything will be in a pre-format, so it will already be filled out in your text form as well. Beside this thing, if you are employee, if your interest on an employee contribution to provident fund is above 2.5 lakh on a per annual basis, then it will be taxed. Also, if you have making opted for a unit plan, that is a unit like insurance plan, and if your annual premium is about 2.5 lakh, then whatever the maturity amount, it will be taxed as a capital gain. So you have to look out whether which investments you have. That means around 2.5 lakh. That means you are making a contribution of more than 25,000 rupees. So if you are ULIP plan, you are making a contribution of more than 20,000 rupees on a monthly basis, then whatever amount you are getting after the maturity, it will be taxed. There is a rationalization of custom duty of gold and silver, and there will be a no tax audit of up to 10 crores. Earlier, it was just 5 crores for businesses with 95% of transaction doing digital basis as well. So these are the major key highlights that actually happens in in this budget of 2021 as well. So these are the feature planning which can focus on with the upcoming taxation part. Though this taxation plan is very nearby, but from the next year, for the next financial year, we can actually plan out like what things we need to consider. So if you are new to making any investments, you have to always look out at what actually you are going to face out and what benefits that the government has given to us. So the nick comes out, you need to understand all these things, and for that you need to actually have a someone who can guide you. So you can either opt for a chartered accountant or you can opt for an investment advisor. The need for the investment advisor is that they can actually help you out in increasing your financial literacy. They can help you out in diversifying your portfolio, so that can help you in minimizing the risk and generating higher returns as well. So if you are just opting for a new tax regime and you're getting you want to invest more, you are satisfied to pay the taxes, then it's diversification. Then you have the option to diversify your portfolio, not just to lock in your money for the period of 3 years, 5 years, 15 years in the provident fund. It's better you can diversify your portfolio on all these instruments if you're opting for a new tax regime. And if you opted for an old tax regime as well, then you have again an option as well. So it's better to consult someone who is a financial advisor or the investment advisor before making any investment decision as well. So with diversification of your portfolio, you are actually not just able to save the taxes, actually you are able to generate a more returns over it. So the taxation part won't be an issue. With an investment advisor, they actually do the budgeting part. So they actually help you out in analysis of like what are your assets, how much liabilities that you've been having it, and how much interest that you'll be paying in ahead, and how much claim that you'll be claiming with even the old tax design as well. And with investment advisor, as the new regulation comes out with the SEBI in the month of December as well, in the month of September 2020 as well, in the month of July 2020 as well, that the investment advisors only are being not just the transparent, they are be have to be transparent. They give the unbiased advice and they are cost effective. So whatever products and services they will be giving you, they will be charging the fees. They are not charging any commission on these services as well. And with investment advisor, you can actually able to not just plan your taxes as well. You can they can help you out in achieving your financial goals. So if you have any financial goals, like you want to plan for buying a house, you want to plan for your vacation, you want to plan for your retirement, you want to plan for your children's education, you are planning for to support your dependent parents as well. So investment advisor is there to guide you on all these things, even for your insurance planning as well, even for your tax planning as well. So as I said in the previous slides as well, that always consult with your CA or the taxation part, and if you're making any investment decision, then it's better to consult an investment advisor, because both plays the vital role when it comes not just to income tax, it also comes about the financial survivability for which we are actually working and earning some money over it. So that's an important part. Now there is another service. If you still have any doubt with the services which you wants to even go for, you wants to understand a particular product, then Kedia Capital has released all the services that is an investment and insurance that is a call the advisor. So you can anytime call them, ask your doubt with respect to your investment or insurance, with respect to your taxation part, like how much taxation is charging out, with respect to your estate, with respect to your retirement planning. And if any doubts you have, you can contact them and it's a free of services for up to 15 minutes, 5 emails. That's a one time, but you can call them and ask your doubt. It's better to ask a person who is experienced and qualified rather than asking someone who is not being just a friend or relative. It's better to ask can get a facts and figure because Google does not give you Google gives you all the information but not the facts easily. So it's better to ask someone rather than googling it or searching it online entirely. It's better to have it get a consultant advice for it. So you can call them and ask for the services as well. Beside this thing, that's a part of it. If you want to go for any services and